Hey all, welcome to Share Trek. This is Raj here. As we head into the weekend, I thought it's the ideal time for us to take a look at the state of the market and do a bit of technical analysis like we always do. Apart from that, I'll also be responding to user requests for company-specific information. Today, it's going to be the ticker symbol FATE for Fate Therapeutics, as requested by Michael Methoff. So we'll investigate that. But before we proceed, please indulge me by entering your name for the acrylic on canvas painting raffle to celebrate our 200th subscriber, which is going to happen imminently. We are already past 1,700 subscribers at this point of time. You'll find the link to submit your name in the description below. Please do take a look at our community section as well. If you have some time, there is good content out there. I'm trying to put as much value as possible into this YouTube channel so that your subscription is worth it. And that said, let's get started. Welcome back, friends. The question in my mind today is, why was the stock market up on Friday? QQQ was up 2.76%, and that is a significant percentage hike in QQQ. We need to dig a bit deeper. It seems to me that even though the job reports came in 23,000 more than expected by consensus, that's almost a 10% outperformance, because the markets were expecting 200K jobs, but we came in at 222.3K jobs. So that's 10% hike, as I said. One would expect that this would have depressed the markets because it indicates a strong economy, and hence the feeling would be that the Fed would get more hawkish and there'll be more interest rate hikes. However, if we look at the fact that employment in the services sector fell 1.7%, this does not look inflationary. Because if you recollect my commentary last week, I was saying that even though the goods inflation may fall in the CPI, but services sector inflation is high, and the services job market is quite tight. So this 1.7% fall in employment in services sector seems to be a move in the right direction, and it mitigates the 23,000 extra. And then further, if we go and look at the wage growth came lesser than expected at 0.3%. And the service industry revealed a fall in new orders by 10% and production fall by around 10%, leading to ISM Services Index to register a 49.5% reading as against the expected 55.1%. That would mean that the Fed policies are moving in the right direction. It also gives us a glimpse that potentially we may be in for a soft landing. So the Fed might be a bit dovish, and they will calibrate their approach carefully. And as a result, in the absence of any other signals to the contrary, the market is starting to feel better, and it's starting to feel that the Fed measures are having an impact on inflation, and that the Fed will be a little more benign going forward. This can change as soon as we have any other information to the contrary. That is why we need to watch for the consumer price data that's coming next week. If the CPI also shows a drop, the markets can improve further. So anything can happen. Also, you should remember that the road to recovery is going to be a bit bumpy, as we should start to get quarterly earning reports from various companies by the start of the third week of January, and they can move the markets. Even though it's a backward-looking indicator, but still it changes the market sentiment. And also the statements that are forward-looking will be made in the quarterly earnings report. They can move the markets. I do want to highlight a news article that said that the SEC ended its insider trading investigation into former US Senator Richard Burr without taking any action against him. We'll never know the details unless someone puts in a FOIA request and pursues this story. And I'm sure that some of the financial journalists in US will definitely do that. We also have an ex-president who is still walking free and making inflammatory statements in general. This contrasts with ordinary people serving jail sentences over minor offenses. Now look at this in the backdrop of the failed speaker vote in the House of Representatives. It paints a very bad law and order as well as governance environment in the biggest equity market. Investors need to be concerned and careful. That's why the road to recovery is going to be bumpy, because even if a speaker is elected by the GOP representatives, it's going to be a dysfunctional house, and legislature is not going to be made, and the debt ceiling is going to be another big drama, which could cause the share markets to tank. So be very careful as you go ahead. That said, in the US, the 30-year fixed mortgage rate is at 6.63% and the inflation is at 7.1%. Both of these are huge numbers for their categories. This has led to a drop in home sales. The industry experts are bracing for 2023 to end with the 30-year mortgage rate at around 8.5%. We can be sure that the home sales will fall. However, it will depend on inventory levels as well as to predict if home prices will fall. We'll have to look at what kind of markets they were. Those coming for mortgage in 2023 will have to decide if they can still afford their homes. If not, inventory can increase otherwise. We can see sales drop overall, but when it comes to price cuts, it will be less in moderate markets and it will be high in frothy markets where the price has been going very high. Parts of Florida come to mind where there was an increase in prices. Now they are the ones which are going to lose. So it's not going to be across the board fall in price, but certain areas which were frothy will experience higher price declines, and the ones that were less frothy will have less price declines, but overall the sales numbers may drop. So that's what we are looking forward to, assuming a soft landing. Now let us look at the index before turning to examine Fate Therapeutics. Well, friends, here we are in our TradingView platform, and I'm looking at the NASDAQ futures. Each of this candle is a one-day candle. And as you can see, the NASDAQ futures is up 2.71%, which is a good sign for us. And now let's go and have a look at our indicators. When you look at indicators, we can see that oil price is still down. The Euro oil cap, I think we'll find the effect of that in the next few days. If you look at QQQ, we can see that QQQ was up 2.76% as I mentioned earlier, and we have just crept out of this long-term bear channel that we were in. So this is the jumping out, and then of course I have not updated this chart for a while. So you can see 268.74, which was a support for us earlier, is now acting as a resistance, and then there is another resistance for us after that at 273.52. I'm going to mark that also red. But friends, I'm not very confident that this is going to be sustained because we need to cross another hurdle, which is going to be funding the government that's coming down the line. And we also have the GOP trying to elect their speaker. And what happens after that will also determine how the market will move. So right now there is a lot of headwinds, so be careful. Don't get carried away by this minor growth. That's what I would say. S&P 500 is still within the long-term bear channel, even though it's up 2.29%. And if you look at Russell Index, it's up 2.25%. And it happens to be still within the bear channel that we had before. Just trying to drag this out. I'm going to just discard this one. This is no longer valid. And I want to find where. Yeah, I want to pull this out here, so that we can see that we are still within the long-term bear channel. We have to break through this before we can do anything. So we are not out of the clear yet, not out in the clear yet. We have support out here for Dow Jones Industrial Average, and also we have the 50-day simple moving average, this orange line, which is giving support, along with the 10-day simple moving average, which is the yellow line out here. Both of them are supporting the index at 336.28. Which is a gain of around 2.14%. So this is looking decent, but there is a next resistance which is at 341.37. MACD is bearish and momentum is just above 50. Now, if you look at VIX, VIX has come down significantly from the heydays, but still we need to come down below 20%. We are right now at 21.14. So the coast is not clear. And also I can see here that we have a formation of higher lows out here, which is not a good sign. We don't want higher lows. We want lower lows. So we want it to start coming down just like it did out here. So VIX is not pointing in the right direction at this point of time, unfortunately. And if you were to look at the US dollar index, the US dollar index is consolidating. If it consolidates, it means that it's likely to move upwards. Right now, it's being stopped by the 200-day simple moving average, which is at 12,958.22. Apart from that, there is nothing else stopping the US dollar from going up. So with that said, let's go into the index movers. Microsoft was up 1.18%, but it's already dropped a lot. And we have earnings coming up for Microsoft on 24th of January. So until 24th of January, we'll have to expect some kind of volatility out here. And based on the earnings, we'll have future determination of the direction. Apple was up 3.68%. I believe Apple has been beaten down significantly, but we'll find out during the earnings what's the impact of the production in China. Apple has been trying to move more production to India, but I don't know how far it has reached in implementing that plan. And we need to hear about the future estimates from Apple when they do their quarterly earnings for the last quarter of 2022. And that can set the direction for Apple. But based on all I know, I think Apple is being undervalued at this point of time, and there's a lot of upside. And if you look at Amazon, Amazon was up 3.56%. It's at an all-time low at this point of time, and I think it's undervalued. There has been reports that say that the cloud revenues are being squeezed, but I think cloud is still the cutting edge of technology at this point of time. I do not see any alternatives. So cloud is here to stay until any alternative technology comes up, and therefore I think Amazon will have the strength of cloud behind it. And even though inflation is down, it is going down on the services side. So Amazon is more on the goods side. So I think Amazon should do well. So that's my thought process. And Google was up 1.60%. Right now, Google is at a low. I think Google has got some legal headwinds on top of it, because there is going to be always efforts by the EU antitrust authorities. And also we have AI featuring more and more into the overall technology sector for finance, as well as in general for content production and all that. And Google has its own AI systems out there, but there is talk that it may disrupt the SEO business, and it may disrupt the search engine business. It will be like an upgrade for search engines. But again, I feel that when it comes to AI, it all depends on what is being fed to the AI. If it's anything like what we have seen the internet be with the advent of social media, we as humans got wrong information and started believing wrong facts or alternate facts. So that could impact the AI learning systems if it gets contaminated with false information. So I would still think that the Google search platform is going to do very well and continue further. I would like to get your feedback on what you guys think about it. So with that perspective in mind, I think Google is underpriced and it has to only go up. With that said, I think I'd like to go on and have a look at our genomics stocks, and let us go to the genomics. And if I look at genomics, I'm just going to sort it so that I have the winners on the tops. Allogene was up 4.82%, and it's got next resistance at 6.53. Right now it is at 6.09, and it's on a downward trajectory. It has to break through this resistance in order to make any sense. At this point of time, the MACD has turned green, and momentum is at the very bottom. And Invitae was up 4.74%. Look at this chart. It's very difficult to even see it unless I zoom into it. It's been steadily gaining. Invitae has been steadily gaining. I did a special on Invitae recently. I think the share price should improve. It's in a traditional business as compared to others in our genomic stock list. And genetic diagnostics is becoming more and more accepted in the medical field. So I think in the short period of time, we are going to see Invitae firm up and improve the share price. And we are looking forward for it to cross 2.15 maybe in a couple of weeks. So that's what I am thinking. The MACD is also strong and bullish, and the momentum is reaching towards the 50% mark. If you look at Verve, we have Verve up 2.15% as of Friday, and it got stopped out here by the resistance at 20.82. The MACD is bullish, and the momentum is just coming close to 50%. And there's support from the 10-day simple moving average. So yesterday we tested both the ranges, and I think next week we should see further growth for Verve. Editas was up 0.56%. It has been consolidating. It's being supported by the 10-day simple moving average. MACD is bullish, but momentum still needs to improve for it to make any further gains. Next, let us look at Illumina. This chart has got a one-day candle each. And you can see that Illumina is being supported by the 10-day simple moving average, which is sitting at 197.69, and it's being constrained very strongly by the resistance at 208.37 as well as this thick blue line, which happens to be the 100-day simple moving average sitting at 208.78. So it's range bound between these two for the last 5 or 6 days. It needs to break through this range, preferably upwards, because MACD is bullish. Momentum is just shy of 50%. The moment the momentum goes above 50, I would feel much more confident for it breaking up outside. But that said, Illumina still is a good company. Recently, there was a report that I read about a group of scientists who got together, and they said that the EU assumption that if Illumina took over Grail would cause a problem in the field was totally unfounded. But I'm not sure if EU antitrust authorities are going to pay attention to that article, or for that matter, the US antitrust authorities either. So Illumina still needs to resolve that Grail issue, and then the share price can really rebound like anything. That's my opinion. And if we look at the next candidate, which happens to be Bluebird was down minus 0.25%. It's still above this diagonal line of support on the bullish channel after having fallen sharply in between. But the absolute support is out at 6.44, and we need Bluebird to stay above this for a while. So at this point of time, what we have as new news is that Bluebird has managed to sell its second, let me show you the news article. Bluebird sells a second priority voucher. So Bluebird has sold its second priority voucher for $95 million. So that's the scoop from Bluebird. So far they have sold both their priority vouchers. The first one went for more than 100 million, and the second one has gone for less at 98 million. So overall, they have raked in around $200 million from their priority vouchers. So that gives them a little bit of staying power. But I'm still waiting to hear from Bluebird what they are doing with SkySona. How are they going about marketing it? And also, I want to hear more about whether their client list, which was at 27 clients being evaluated financially and medically to get into paid treatment for Zynteglo, whether that list of 27 has expanded to more, whether it is sitting at 50 right now. We need more information, we need more color, and I think that's going to come to us probably at the latest around say 22nd February. I would like Bluebird to probably come up with a news release shortly and give us an update on the patient numbers so that the stock can sustain its rally. Otherwise, I can see it falling below this diagonal line of support, bullish line of support. That said, let us go and have a look at CRISPR Therapeutics, which was down minus 0.51%. It's being held back by this resistance at 47.93. It's being supported by the 10-day simple moving average and the bear channel out here, where we have a support line, which is the diagonal green support line that we have here. And the MACD is bullish, but momentum is just at 50. I think that CRISPR still has a good chance for staying above the 10-day simple moving average and attempting to break through 47.93 on Monday. Next, I would like to look at Caribou Biosciences, which is down 1.29%, and it's in a bear channel, which is a long bear channel, and it's getting support from the 10-day simple moving average. At this point of time, MACD is bullish, but momentum is not there. PSCB was down 1.52%. It's moving in a bear channel, which is bounded by this red line on the top and the green line on the bottom for support. And it's currently resting on a support from the 10-day simple moving average, which is at 8.29. It needs to break through this diagonal line of support out here in order to be taken seriously. Of course, PSCB is a good company in my books, and the share price should definitely improve. But right now we are in turbulent times, so I'll wait and watch what's happening. And also, if you notice that the momentum is not yet at 50%, and that's the reason why I can't be bullish at this point of time. If you look at Intelia, it was down 1.78%, even though it took a sharp jump on 4th January 2023. It's now kind of consolidating out here at this point of time with support from the 10-day simple moving average, and the next resistance happens to be at 43.64. Beam Therapeutics was down 1.85% on Friday, and MACD is bullish, but momentum is just below 50, and it got absolutely good support from 40.22, which is the horizontal support, and it also got support from the 10-day simple moving average, which is this thick yellow line sitting at 39.50. Our next challenge is going to be this thick orange line, which is the 50-day simple moving average sitting at 43.52. So once we cross over that, then I think we should be in a better shape. DNA is down 3.18%. It's quoting at 1.52. Today it touched its all-time low and came back up again. And its MACD is slightly bullish, but on its way down. Momentum is also pretty low, indicating that the interest in the company in the market is quite low. SQZ Biotech has also tumbled significantly. It's gone down to 0.74 cents. It's down 4.18%. Again, momentum is very low. Market doesn't seem to have any interest in this stock at this point of time, even though the MACD is bullish. So I don't see much hope for DNA and SQZ Biotech for the near term at least. Friends, that brings me to an end of the technical analysis session for this week. Now I'd like to focus my attention on Fate Therapeutics. Michael, basically I went through Fate Therapeutics. This is the first time I'm coming across this company, and I wanted to respond to you quickly because if there is an opportunity on Monday, I wanted to capture that. So basically what I have found out is that Fate Therapeutics is a cell therapy company that had entered into collaboration with Janssen, which is the biopharma arm of Johnson & Johnson. And they entered into a deal somewhere around April of 2020 for worth $100 million, out of which $50 million was paid in cash upfront, and the rest was done in terms of equity investment by Johnson & Johnson, $50 million worth of equity investment into Fate Therapeutics. And on 5th of January, that is a day, I think it's Thursday, that's a couple of days ago, Fate and Janssen jointly announced the termination of their collaboration. Some sources say that Janssen had offered revised terms and conditions to continue with the collaboration, but Fate Therapeutics did not find the revised terms attractive, and that's why the deal fell through. The negative impacts are that this stops further milestone payments and also funding of the pipeline items that was funded under this initiative. As a result, Fate has announced that it will reduce its headcount by around 220 employees and has said that it has sufficient cash until end of 2025. Also, it will be just a little harder for the Fate team in future to negotiate new collaboration, given that collaboration with one of the big majors like Janssen had failed. So that's going to be a bit of a difficulty for the company, in my opinion. The drop in share price was almost 57%, which is a record drop one day. Usually these kind of sharp falls lead to a dead cat bounce on the following trading day. So look for a jump on Monday. I don't believe that the Janssen deal alone should have warranted such a big premium that the termination of the deal should cause such a big fall. If Fate Therapeutics does indeed get one of its candidate enabled by mid-2023 as they have promised now, the share prices can recover and continue to consolidate. But from now onwards until they announce the success of IND enabling, there's going to be a bit of turbulence as the market tries to find new value for the share price. I don't have a long-term opinion on this company as I have just scratched the surface. I hope, Matthew, you find some value in what I have looked at out here. I will do a more detailed video on this company at a later date. So that's all for now, my friends. Have a great weekend. I will talk to you tomorrow. And just before I leave, I would like to encourage you once again to enter your name in the raffle for an acrylic on canvas painting that I will make myself, and I'll mail it to you at my cost. All you have to do is go to the link below, click on it, enter your name and your email address, and leave the rest to me. I will draw the lucky winner when we reach 2,000 subscribers, which is going to happen shortly because we already passed 1,700. We are growing at a rapid pace. As and when we cross 2,000 subscribers, I'll do a live stream and we'll pick up a winner of the raffle in the live stream, and I'll send the painting to you. Thanks and have a great day. Bye for now.